Oppenheimer's 21st Annual Consumer Conference. My name is Rupesh Parikh. I'm the Senior Food, Grocery, and Consumer Products Analyst at Oppenheimer. I'm glad you could all join us for today's panel on cannabis. We have a big mix of both retailers and producers, which we think will make for an insightful discussion. So we're excited to have with us today Sebastian St. Louis, CEO and co-founder of HEXO. For those who are not familiar with HEXO, is a global consumer packaged goods cannabis company that caters to both the medical and recreational market. HEXO is the largest player in the Canadian recreational market, inclusive of pending acquisitions. Trevor Bencott, CEO of Fire and Flower Holdings. Fire and Flower is an adult-use cannabis retailer in Canada. In addition to the company's retail platform, it offers wholesale distribution and fulfillment capabilities and a proprietary digital retail analytics platform. And Sean Bovingdon, CEO and interim CFO of the Green Organic Dutchman, a global leader on cultivating premium, certified organically grown cannabis. TgOD has a broad product portfolio, including dry flower, oil, teas, infusers, and vape products that sells in Canada under the TgOD and Highly Dutch brands. TgOD also distributes premium hemp CBD oil, CBD-infused topicals, and food supplements in Europe. So thank you all for being here today, and I think it really is a very timely discussion. So let's get started. So I first want to start off with the Canadian landscape. So this is first a question for Sebastian and then Sean. So I'm very interested in what you both are seeing in the competitive backdrop, both on the legal and illicit side. And Sebastian, you can start first.
Thanks, Rupesh. And I think what's been really interesting over the last 2 years of legalization has been that the legal Canadian market has largely displaced black market in the flower category. As a result, we've seen the black market actually move in some pretty heavy innovation on concentrates. And I expect that's going to be a really interesting place to fish for licensed producers like HEXO in the near term, and of course for phenomenal retailers like Fire and Flower to have available for their consumers. I think from a legal standpoint, it's still highly competitive. In fact, probably more competitive than it's ever been, with quite a number of licensed producers. We're quite happy to see, and I'm sure we'll talk some more about retail, we're quite happy to see more retail penetration and increasing demand month over month. We've seen a little bit of a slowdown from the black market acquisition of clients. So where 12 months ago we were in double-digit transfer from people from the illicit market to the legal market, that has now slowed down significantly. But I think that's largely on the licensed producers to solve from a products availability perspective, so moving into concentrates, and on retailers, of course, from availability of retail locations and also specialist stores, which I think are an interesting opportunity to improve the consumer experience.
Great. And Sean?
I think, I echo what Sebastian said there. I mean, the end of Q3, Q4 of 2020 was the first time that the legal market had a higher proportion of sales from the illicit market. Part of that may have been stalled a bit in Q1 with the changes in regulations that all the boards did in terms of their purchasing patterns, but also because of the COVID restrictions in the stores. But as we see the retail stores now start to reopen, they really are a catalyst for consumers to start to continue that growth in the legal market. The new consumers tend to be more comfortable having stores if we're going beyond existing users. The older customers that tend to be new people tend to prefer stores. They have the confidence in talking to a bud tender, at the Fire and Flower, the qualified people that they have, and the like, to be able to have more comfort in doing that, and that'll see a continued increase in the legal market. Sebastian is right in terms of flower. I think that's a very strong position now for the legal market. The type of quality and consistency of quality that we're seeing. We launched, for example, our TgOD Promise. All of our flower consistently being about 20% THC and having that kind of full aroma and terpene profile that you used to only get in the illicit market, but now all the kind of LPs are getting to that kind of quality of product to be able to produce for the legal market. But there are some challenges now, as again, Sebastian's saying, going into concentrates, and also the other 2.0 products. The edibles is obviously And beverages is a big component that particularly new consumers will be looking to go for. And I think having access into the stores and the retail stores is going to be an important aspect for that to continue that legal growth.
Okay, great. And then Trevor, is there anything you can share around the latest developments on the retail backdrop that you're seeing in Canada? How are you thinking about industry store growth going forward?
Yeah, well, to sort of piggyback onto some of the comments before, it's like we are seeing this mass displacement, I think, significant displacement now of the illegal market as the industrial sort of, or the at-scale production is now sort of overtaking the illegal markets sort of cost efficiency. So we're seeing that in terms of the retail rollout, it's really been very impacted with the regulatory environment. First is very fractured, certainly in Canada. That's province to province. But then we're also, add on top of that COVID, where of course, retail foot traffic is being almost reduced to zero in some instances. So that's certainly been a challenge. I think what we saw in Alberta is particularly instructive. Alberta is actually the most competitive retail environment in the world. It's often talked about kind of Colorado and Oregon, which is sort of true that they do share similar sort of per capita placements of 8,000 people per dispensary. But you have that added level of competition where you're competing with your own regulator there. So it actually is extremely competitive. And we saw an early max out of licenses there. I think it's somewhere in the round of 600 licenses for a province of about 4 million people. So that's a pretty significant number. And we saw that early ramp up and then a sort of a precipitous decline as competition sort of hit. But that market has actually recovered, and it's actually quite a good market for us at Fire and Flower, and I'm sure for our competitors. Ontario has not yet approached that yet. We're still, I think, far under indexing in Ontario. Ontario, we believe, can easily sustain sort of 1,200, 1,300 stores. Steady state, and we're nowhere near that. So store rollout's been slower than I think we would have liked, and certainly, my other colleagues on this panel would like as well. We'd like to get more stores up, and we'd like to see other markets sort of open up. But so the retail landscape, I think we still have another 24 months of aggressive growth in the Canadian market before we max out.
Okay, great. That's helpful perspectives. Then another question for Sean and then Sebastian. So what's been the biggest surprise thus far in the Cannabis 2.0 front? And in which 2.0 categories do you believe hold the most potential longer term?
I would say there's, right now it is, there's a lot of interest in those kind of concentrates moving from the vapes. I mean, flower is still, 75% of the market, but as again, Sebastian alluded to, the concentrates in the black market and hash, bubble hash, shatters, the dabs, those kind of things are starting to take off. But the other fastest growing element, particularly as the retail stores reopen again, is going to be the edibles. I think you're going to start to see edibles in longer term, as you've seen in Colorado and in California as well. Those other 2.0 products do start to come forward. One of our products, for example, the TgOD infuser, the dissolvable powder, Organogram came out with one as well. But that still seems to have a steady place in the market, and it's popular across the country. And as the CPG-ness of cannabis starts to mature and people start to look for different formats to imbibe or take in the product, particularly, again, the new consumers. There's a lot of new consumers who aren't smokers. And they're looking at the wellness and health aspect of it. And so they can look at something that helps them relax or sleep that may not involve actually smoking. I think that will lead to more and more 2.0 products increasing in terms of the use, just like they did in Colorado and did in California, in terms to start to get to that place.
Sebastian?
Yeah, I think a point of surprise, Rupesh, has been just the continued speed of this market. And I think having been in this probably the longest out of any other people in management in Canada, 8 years in, you'd think I would have learned the lesson, but it keeps speeding up. And so the smaller craft growers are finding their niches, they're specializing. They've recently come in and competed directly with HEXO in our hash product line, which was actually caught us by quite a bit of surprise and was actually negatively impacted our quarter. So we had to retool our production and actually really focus in on quality, which I'm really happy that consumers are demanding from the legal market the very best that we can output. In terms of really the categories which remain exciting, I think all of 2.0 really has its separate occasions, but the ones that I think will really surprise people are beverage and pre-roll. And I think from a beverage perspective, we could eventually see, once we get case quantity legislation and people can buy more than 5 or 6 units at a time, I think given the strong repeat rate of ready-to-drink beverage, we're seeing about 86% repeat on trial. So it's an unbelievable repeat rate. Given that, I think we're going to see beverage grow to be about 15% of total category once we have that case quantity. And from a pre-roll perspective, there's a lot of talk right now of pre-roll slowing down, flower remaining strong. And I think that's wrong. I think that's another one of the surprises that's going to come. I think that as pre-roll matches flower on a price per gram perspective, and as we continue to increase quality, made from whole bud, terpene profiles, and the whole olfactory system around the pre-rolls, and really make it a strain-specific experience that you can have your daytime pre-rolls, your evening pre-rolls, et cetera, or whatever condition you may want to treat, or if you're simply looking to have a good time. I think that category will actually grow quite a bit. I'm actually expecting, and I'm an outlier here, I'm expecting pre-roll to be the same size as the flower category in the next 3 years.
That's helpful perspectives. And I'm going to stick with you, Sebastian. So on the Cannabis 1.0 front, what's the latest you're seeing overall with Cannabis 1.0?
Well, I think the 1.0 is we've seen we're near we've hit the pricing floor on flower, which is great to see. That was something that HEXO led a few years ago with our original stash product. So sales going very strong in that 28-gram format now accounts for a large portion of demand in market. I think what's interesting now is that consumers are getting a lot more sophisticated. So we are starting to talk about more than THC potency and more than terpenes. We're starting to talk about all 5 senses. We're starting to talk about quality of high. We're talking about freshness of product, which becomes very key. That's been near and dear to HEXO for a long time. We're now shipping with about 30 days from bulk pack to retail stores, about 30-day fresh, and we're working on a configured order program to get within 5 days by September. So I mean, freshness is something that's very near and dear to us for quality. So I think as you start to hit those things along with strain specific and newness, so there's this concept of the treasure hunt, I think, at retail, where consumers are looking for something new. So you think limited time offers, seasonal offerings, and really strain proliferation. So we're currently working on a 100 strain strategy, which aims to really have something in market for everyone at all times. And I think that paired with our just-in-time configured order system should be very promising. So I think it's really craft at scale that we're seeing emerge here, and consumer preference is just getting a lot more sophisticated.
Okay, great. And then Sean, just given TgOD's exposure to the premium organic flower category, what are you seeing in terms of market dynamics around on that portion of the category? And what has been the biggest challenge, for TgOD competing within this space?
So Sebastian mentioned the wording craft at scale, and there's been very few, in fact, I think ourselves and maybe one other who got close to that at this point in time. So that clean craft process that we employ in terms of bringing more than just the high THC, but it's giving good density, it's giving the smell, the aroma, the high that Sebastian was talking about, as well as a clean smoke, clean burn, and being able to provide all of that consistently, time and again and again. And we've had our challenges in terms of getting to that, and that's no secret in the early days in 2018, 2019. But having changed and got to that point now, it's at a point that we're comfortable and feel very confident and proud of what we're producing now. The LTOs are another aspect that I think is very important for consumers now. They are looking for strain specific. The boards are looking for LTO offerings. So as we bring out, for example, our Sugar Bush, and much like Sebastian, there's different strains that are lined up for Q3 and Q4 of this year. I think that's something that the discerning consumer is more interested in. I'm very happy that the price war has started to abate and people are looking for premium quality and are prepared to pay premium quality. And having that certified organic niche is that craft at scale that people want. We're not going to be able to compete with a value brand Afria, and we don't want to. We want to maintain and be able to provide an offering and a display for the bud tenders in Fire and Flower and the other stores to be able to recommend for people who are looking for that particular craft quality, and not just once one grow at a time that the small craft producers may be able to do and then not be able to repeat, being able to repeat it time and time again. And so you've got that consistency of supply as well as new strains with the same quality coming on throughout the following months and following quarters. I think is an important aspect for us to be able to aspire to continue to do.
Great. And then Trevor, I'd love to hear your thoughts on Cannabis 1.0 and 2.0 from your perspective on the retail side. What are some of the key trends you're seeing out there? And then which brands do you think are gaining the most traction based on your visibility?
Yeah, I mean, I think that obviously flower is still dominating in its formats of like bulk pack, but also pre-rolls are all dominating. So the 1.0 is still a significant format for us. The small producers, I think, we're making some inroads at the 3.5 gram and pre-roll areas. THC percentages, though, do seem to still be a key indicator in performance, which is interesting for us because I would have thought as well. I think that we will see the movement that Sebastian was talking about. We will see that. We're getting early indications of that through our Spark Perks membership program, which we keep very close engagement with our customers on that. Multi-pack pre-rolls are kind of leading the pack. That's, I think, partially because they've innovated their packaging a little bit, which actually very, very good. We're seeing a lot of compression on the vape cartridge side. 510 carts are dominating, but we're seeing, with the introduction of the 1 milliliters, that's really kind of driving down the price per gram. So, one thing I did want to touch on was the beverages. I completely agree. I think that is going to be one of the biggest growth categories, and it's really driven by the inappropriate distribution mechanism. You can only buy 5 of them in the store, and if you've asked anyone who consumes a 6-pack of beer, they would think that's just such a bizarre thing. I don't know, and it doesn't seem to correlate to strength either, which is one of the other kind of key pieces. So it's a bit of a mystery, but I am confident we're going to sort that out. And Sebastian intimated, I do think that there's significant uptake on the repeat purchases of this, and it's one of the key gateways to sort of a social experience with cannabis. A lot of what we're seeing from our Spark Perks network are people wanting social experiences, and the idea of being able to share a beverage is a very key part of culture. That's where beer and wine come in really well, and I think that's the key bridging gap there. So I expect that to be a big driver. I don't know 15%, but I definitely think it's more than the 4% we're seeing right now. And 4% at kind of a handicapped market entry is a pretty good indicator to something. I could see it doubling and perhaps tripling from there. So I did want to do that kind of call out because I think that's it's surprising to us that hasn't happened yet. And then I think also we're seeing, from our perspective, we're seeing that gummies are now starting to kind of overtake the chocolates in terms of a novelty basket builder, which is interesting. We saw strong chocolates coming out of the gate, but that really comes back to one of the other key themes, which is that novelty. The treasure hunt is a real thing. Consumers are really in that product discovery phase. So there isn't a Coke and Pepsi that we can point our finger to yet. And so there's a lot of exploration. So, licensed producers that are offering a broad variety of products are, I think, going to be the winners there. Craft at scale is a real thing.
Great. And then another topic that is very topical right now is just consolidation. So a question for Sebastian, then I'll go to you, Trevor. So HEXO has been quite active on the M&A front lately. Do you think we will continue to see more consolidation in the space? And clearly there's still a large number of players out there, even after some of the consolidation has taken place. Any thoughts on where market share for the top 3 could be within 5 years?
Well, HEXO has recently completed three acquisitions, one of which was perhaps the crown jewel in Canadian cannabis, Redecan, the last and largest privately owned company. that had significant share. So we're diligently moving towards close and integration with that program. But I think that portfolio positions us in the #1 position right now, according to Headset data, with about a 17% market share. So we're #1 in rec share with 17. Next leader, probably 15.5, and the third currently sitting at 14. So I think where our job is if we want to stay #1, I think #1 is somewhere between a 30 and a 40 share in the next 5 years. #2 probably settles at 20. #3 will be settled at about a 10 share. I think with the remaining 30%, it'll be split between craft growers and specialist growers that have a unique niche to explore. And I think that's roughly how the market will split. Now, as part of that journey, there will be more consolidation. HEXO at this point has no plans for immediate consolidation beyond what we've done. We're currently focused on integrating, getting our synergies out and moving to positive EPS. So, but I'm sure some other players are still very active. The challenge is of the 566 current licensed producers, 10 of them control 90% of the share. And so it's very difficult to necessarily find value in all 566 of those assets. There are some gems, few and far between, but you have to be very selective. So we took a criteria, for example, of making sure we had operational excellence in our acquisitions, also market share and intellectual property. And when you start to add up all those criteria, that filters out a lot of different potential acquisitions. And so we're quite happy with where we are. I think it's inevitable that even on the retail side as well, that we will see some heavy consolidation. I know, Trevor, you've been active as well recently.
Yeah, so Trevor, that's a good segue. So Trevor, any thoughts on the retail side, whether we can see more significant consolidation down the road?
Yeah, I definitely think that retail is a scale endeavor at its core, and this is something certainly we learned through our work with our strategic partner, Alimentation Couche-Tard. So scale is going to be definitive at some level. I think you're going to see similar shakeouts. So it will be, sort of 3 large players, and then a fourth kind of quadrant, which is held by sort of mom and pops and kind of niche market entrants. There is a significant market for kind of independents in specialized markets, where I think it's going to be very challenging for independents is in the mass market, like the large market, urban center markets, because that's where things like customer engagement and loyalty programs matter, right? Scale matters there. That's where things like purchasing power to fuel things like mass premium individuated product offerings is going to matter. So I do see similar type consolidation. We just recently completed the integration of our Friendly Stranger acquisition in Ontario, which put us at 29 stores in Canada's largest market. So we'll continue to look around. I do think the consolidation is nowhere near done yet, but I do think we end up steady state with a similar kind of mix of 3 dominant players.
Okay, yeah, that's really helpful perspective. And then the other area that's very topical right now is U.S. legalization. So start with Sean and then Sebastian. I would love to get your thoughts on the timeline for potential U.S. cannabis legalization down the road. And then what are you both focused on in terms of legalization, and then just thoughts on an overall timeline?
Yeah, so I don't think there is any clear timeline yet. I think much of the retail investor base has got excited about potential federal legalization, but I think that's further away than people hope for. Frankly, I think getting the Safe Banking Act through is possibly this year. I think that has a lot of promise potentially, but the MORE Act I think is going to get held up in the Senate. But Biden hasn't really come out in full favor of that. He may have some decriminalization potential, but nothing beyond that. So with that, though, there is still continued regulatory progress in each state and a lot of the different states. And from our perspective, that's an opportunity. We need to see whether the TSX will allow investment directly into the US first, which I think there's been some rumblings about. If not, we will look to move to the CSE to allow us that optionality to then move into some of the Northeast states or some of the tier 2 states, such as like Connecticut or Ohio or Virginia, that have an opportunity for us to look at again the niche halo of organic. There's the clear green directory of LPs or the equivalent of LPs in the US that have that kind of organic certification or self-certification, because there is no federal certification. That enables us to look at those and be able to partner with those or potentially acquire a smaller subset of that, and depending on what type of license they have. As you know, the regulatory market in each state is very different, and the kind of licenses you're allowed is very different, whether it's vertical or just distribution or just cultivation. So we have, we're starting to do the work now and get ourselves in a position with a more stable balance sheet we have now to look at something in that kind of 30 to 50 million range, being a smaller entity that we are, but still being meaningful for us to get a foothold again in that niche organic play.
Great. And Sebastian?
Yeah, I think what's interesting about U.S. legalization is that we don't need to wait as licensed producers. So HEXO is currently in market using CBD from hemp in our Trust beverages with Trust USA in Colorado. We've recently made an investment in our first production facility south of the Canadian border, so in the state of Colorado, with a 50,000 square foot facility that's actually licensed at the municipal level for THC. That does not mean we are producing THC today. So we are waiting for clearance from the federal level, but we are checking the boxes on all the regulatory checkpoints as we go through. There's also interesting beyond CBD structures that we're currently exploring. Options that don't derive revenue from cannabis, for example, which we're looking at, which would allow us to export our intellectual property to the US. So HEXO has class-leading margins right now across a number of categories. I mean, we're number one in most categories in Canada right now on a post-consolidated basis, and that includes pre-roll flower, oils, hash, beverage, etc. Topical creams now with our acquisition of 48 North. So what's interesting is we are allowed legally to export that intellectual property to the US and to manufacture there. So currently looking at legal structures to participate in specific state-select markets, and I think that'll come way before the full-blown US legalization.
Great. And then Trevor, would also be interested to hear your thoughts on this. What type of effects do you think a potential US legalization could have on your business down the road? And does your team plan to enter the US?
Yeah, I mean, that's always been our plan. I mean, that was made clear to us as well with Couche-Tard that, look, they're in 16,000 locations in 25 countries. We were always going to be in every one of those countries where it's legal. I think for us, it's always been the same kind of playbook, though. We started as a tech-enabled retailer. A tech platform is a core part of how we operate in our operational model. So we've already been in the U.S. market. I mean, we announced a year ago that our technology is bundled with Cova, which is a point-of-sale system with 10% penetration in the U.S. dispensary market. We announced a couple of months ago our partnership with BDSA, which is the U.S. data analytics platform. So, and I think what maybe got missed in the flurry of releases in the sector is that American Acres is our sort of proxy in the U.S. So it's a compliance structure, much like Sebastian mentioned, where although they're a third party, we have the right to acquire them, and we have put our IP in them, so they have access to our Hi-Fire tech platform, our processes, all of our IP that makes us such a valuable and formidable competitor in Canada is now domiciled in the U.S. And of course, the Palm Springs location, people should expect to see that as a Fire and Flower branded location, and we are able to derive digital revenue. So tech revenue is permissible revenue under the TSX. So to Sebastian's point, I agree. Like, people should not be waiting for U.S. market entry. We're very clearly there now, and we intend to expand our footprint.
Great. So I'm going to wrap up with one question for each of you. So first, a question for Trevor and Sean. So if you look at recent data, cannabis retail sales for the Canadian government was $2.6 billion in 2020, and the most recent run rate is about $3.6 billion. Curious to get your thoughts on the sizing of the market in the short to intermediate term on the recreational side. So Trevor first, and then Sean. Yeah.
Yeah, I mean, I don't think we've maxed out the market at all. I think that we're going to continue to displace the illegal market as we compete on price. I think that part of it is largely done. I would agree with that. But we're now going to start to compete with, we haven't even really started the product variety competition. We've got a lot of products out there, but nowhere near what the illegal market has. So as we start to be able to compete with that, we'll see more of a shift. It's a huge illegal market still operating in Canada.
And I think the store count's continuing to rise as well, right? So we're still at about 2,200 stores. I think you're going to be up to 26 to 3,000 stores nationally here within the next couple of years, or perhaps even less than the next year and a half. So with that, I can see easily by 2024 being in the $5.5 billion range for the legal market.
Okay, Trevor, do you have a guess for the size of the market?
Yeah, I mean, I certainly think 5 billion is achievable. I would also add too that you need to have other modalities be part of it. So things like e-commerce and delivery are a critical part of the illegal infrastructure and need to be made part in Canada as part of the legal infrastructure, because you're going to reach more consumers. So it doesn't have to be 3,000 stores. It's 3,000 stores plus 3,000 delivery radiuses equals market growth.
Great. And then to wrap up with Sebastian, So, I guess as you look out longer term within the Canadian market, what do you believe are the key factors that are needed to drive a healthier, more profitable backdrop for leading players? I mean, we look at a number of your peers. HEXO had positive EBITDA the prior quarter, but most of your peers are struggling to get to positive EBITDA at this point. So, what do you think needs to happen, really to get to that more profitable backdrop for the industry?
I think one issue is one of scale. So I think scale is critical to be able to absorb all the SG&A related to regulatory compliance and quality. I think I also think we need to get to fair competition. I think, and what I mean by that, I think the capital markets across the 8 years have played a perverse role in moving the spot price to places where it should not be. So if I take you back a few years, for example, the intra-license producer spot price was $8 a gram, while the same producers, and this was excluding us, we never did this, but the overall, those producers that were buying for $8 would sell into the provinces for $4, and then that would make its way to retail for $6. So obviously that's a failed business model. The reason that was enabled was because of this capital markets euphoria and too much cash thrown at the wrong companies, and CEOs that needed to justify their stock price by continuing to get the sales higher while they didn't have the operations to sustain that. I think some of that dynamic is still at play today. I think that we haven't fully surfaced value in the right companies and the strong operators that are able to run strong margin, that are able to run at low operating loss, but very soon at operating profit. And I think that those factors, once they level out, will really allow consumers to thrive, to continue to get more variety, to Trevor's point, to continue to get better pricing across all product categories, and really to move us to that, what I think is a much larger market than we've talked about here today. I think that the eventual retail market is going to be about an $8 billion market in Canada. So I think that those factors, along with some regulatory improvements, we talked about case quantity beverage, but a number of other improvements like e-commerce, to Trevor's point, will help a lot to move that needle. But with all that, I mean, it's easy to be highly critical on these calls. We've built a $3.6 billion industry and eliminated almost a third of the black market activity in Canada in 2.5 short years. And so I think all stakeholders need to be extremely proud. We're starting to see companies like HEXO move into very strong ESG platforms. We're now completely carbon neutral. And so as we're gaining this power and a voice and a meaningful platform on the Canadian scale, we're actually doing good with it. And I think overall, society is benefiting quite a bit from this Canadian legalization.
Okay, great. Well, thank you very much, Sebastian, Trevor, and Sean, for joining us today.
Thank you,
Rupesh.
Thank you.
Thank you.
Bye.